Good evening, everybody, and welcome to our first Thursday Talks of 2021. Today, it is a pleasure and our privilege to have amongst us Dr. Trevin Stratton, Chief Economist and Vice President, Canadian Chamber of Commerce, Mr. Sandeep Goyal, the President and CEO of ICCC Bank Canada, and I will be your host today. Moderator Vijay Thomas, President of the Indo-Canada Chamber of Commerce. So what are we going to be talking about today? We're talking about the state of the economy, special insights into the Canadian and the Indian economy in the post-pandemic scenario. So questions that you might have: will the interest rates go up? Will the value of my home plunge? Where should I invest? How will the post-pandemic economy affect my business? And we have, I think, people that are very well qualified to talk about this. And we'll be looking at both sides of the border. We'll be looking at, not the border, but, India and Canada. We will look at it as a border, but, Canada as well as in India. So without further ado, we will move to the next slide here. Let me just try to move this. Okay, so today we'll look at, economically in 2020, because of COVID-19, things were not too good, is probably a very light way of putting it. So how will 2021 be? After a 4.2% decline in 2022, global world GDP is projected to increase about 4.6% in 2021. But the global economy may get worse before it gets better. So the COVID-19 virus will stay with us. People are talking about a 70%, vaccination for us to get to herd immunity. Now, when would that happen? That's all a timing thing. And that's why we have experts here who can talk to us about when this can happen. So as we at the ICCC, we also believe in helping small business, or a little bit about what we do as the ICCC Small Business Assist Program. We provide phone-in counseling. So if you are a small business, need any help, send us an email, call in, and we will help you, assign you to a mentor or a team member who has some information on the subject and can help you. This could be finance, could be technology, and we'll get you connected with somebody. We have a little disclaimer here. The information provided webinars are conducted by ICCC for general information, does not constitute legal or professional advice. And furthermore, the views expressed by speakers are their own personal opinion, do not necessarily reflect the official position or policy of the ICCC. With that, I will come to Dr. Kevin Stratton. Kevin will give you a few minutes to take us through a state of the economy address that you've prepared for us, and then everybody in the audience. We will have Mr. Sandeep Goyal also give us a little bit about his thoughts about the Indian economy, and after which we will try to spend as much time answering questions from the audience. So with that, over to you, Dr. Trevin Stratton. Over to you, sir.
Thank you, Vijay, and it's a pleasure to be here today and to be invited to give this talk as well. What first of all, maybe I should explain. So I'm the Chief Economist and the Vice President of Policy at the Canadian Chamber of Commerce. So obviously involved in doing economic outlooks and economic analyses, but also making policy recommendations on how to grow our economy, make it more competitive, or within the current context, of course, recover our economy as well, coming out of this pandemic. For those of you that may not know, the Canadian Chamber of Commerce is in essence the voice of business in Canada. So we represent a network of around 200,000 businesses across the country, from every region of the country, every sector of the economy, from some of Canada's or some of the world's largest corporations, all the way down to individual small businesses as well. And so if you can go to the next slide. What I thought I would do is give a very brief overview of what's happening globally with the economy, and then maybe situate Canada within that, of course, with the acknowledgement that Sandeep will, of course, be covering the Indian economy later on in his presentation. And so I think what is very important to keep in mind when it comes to Canada, but also many countries in the world, is that we've hit a bit of a setback when it comes to economic recovery. This idea that if we, we're able to control the first wave and reopen our economy and eventually get to economic recovery without a second wave taking place has not turned out to be the case in a number of different economies across the world, particularly in a number of different advanced industrial economies like Canada's. So if you look at the graph on the left, you'll see a number of those advanced economies that I mentioned, and the case numbers and what's happening all the way until January, very recently. And you'll see that there certainly has been a spike or a second wave in a number of different countries, including the United States, including the UK, of course, which was where this new variant was developed or was first appeared, and certainly we're seeing it in Canada as well. I think it's safe to say that we're really in the middle of a second wave of COVID right now too. And this is having a particular impact on the Canadian economy, which I'll show you in a second, but also on the global economy too. The fact that we've entered this second wave means that what we saw during the first wave when it comes to disruption of global supply chains, when it comes to supplier times, when we're looking at PMI or manufacturing as well, that has remained slow. And so we see issues coming up again when it comes to this at a global level as well. But specifically, when we look at the graph on the right, you'll see that at least in terms of cases per million of people, a number of different emerging market economies are doing a bit better than some advanced economies, at least when it comes to case numbers too. Some of these countries avoiding a second wave as well. And so what we're seeing in a lot of ways is that the largest impact on a health side, but also on the economic side, tends to be taking place in advanced economies, while emerging markets and developing economies, obviously with a few exceptions, they took a bit less of an economic hit last year, and their growth rates are also projected to be a bit higher this year when it comes to the economy. So if you go to the next slide, I have some data on that. So as you can see, when we're talking about Canada, I'll show you some very detailed information about the Canadian economy in a second, but we're kind of middle of the road when it comes to the economic decline that took place in 2020. So Canada's economic decline last year was around 5.5%. The Canadian economy contracted 5.5%. Obviously less than the United States, our closest neighbor here in Canada, or sorry, more than the United States, our closest neighbor here in Canada, but also less than quite a large portion of the Euro area as well, which saw a pretty large economic contraction, about 7% as a whole. And of course, there are some countries that were harder hit, Spain, Italy, France to a certain extent, and specifically a number of those countries had very robust tourism sectors that have been impacted because of this now. But as we're looking ahead to this year, we'll see a bit of a rebound, but it's not happening immediately. We'll have to wait until at least the second quarter to see that rebound in full effect in a lot of countries, including in Canada. And so when we're looking at growth rates looking ahead, the United States is supposed to grow by about 5% this year, Euro area by 4.4%. What I really want you to look at is China. So last year, China was one of the only major economy in the world whose economy actually grew in 2020. Pretty much every other major economy contracted last year. And their growth rates for this year are supposed to be upwards of 8%, which China actually hasn't even seen that rate of growth for a little while. Certainly part of this is a rebound and pent up demand from the contraction, just making up for lost economic growth. But obviously there's a bit of an interplay taking place between advanced economies and emerging markets or developing economies when it comes to power shifts taking place in the global economy. And so overall, in the world, last year, the economy contracted by about 3%. And this year, it's looking to grow by about 5.6%. If you can go to the next slide. There we go. And so when we're looking at Canadian economic growth, so this year Canada's economy is looking to grow about 4%, but when that happens has recently changed. So I think something that we've realized, particularly with the second wave, but even before that, is that the initial hit to our economy during the first wave was not as deep as we initially thought. but that the economic downturn is going to be much more prolonged or longer than we initially thought as well. And so what we see, this data is basically hot off the presses, was just released yesterday by the Bank of Canada, is that we're looking at around a projected decline during the first quarter of this year in the Canadian economy of 2.5%. So this quarter, the economy is going to be declining, and obviously that's very significant for a number of different businesses, particularly those that were able to make it through the first wave, were borrowing a lot of money, because they needed the liquidity. Now they're really up against it when it comes to the second wave, because they might just not have the ability to take on that more debt. Secondly, that these impacts aren't taking place evenly across the economy. There are certain sectors, in particular those sectors that rely much more on physical presence for their business models to work, that are being hit much harder. And so those include accommodation, food, arts and entertainment, recreation, certainly transportation, and warehousing, and in particular, obviously air transportation has taken a very big hit in Canada and elsewhere. Definitely what's happening when it comes to the energy sector too, which is a huge contributor to Canada's economy. What's happening with energy prices due to a drop in global demand has had an impact, but that might be changing looking ahead, and I'll get to some data on that in a second. And so it's important to keep in mind that, a lot of these small businesses in these hardest hit sectors right now in the first quarter of this year are really going to be facing quite a bit of challenges. But if we're able to help them bridge through or make it to the other side of the river through this first quarter, then ideally conditions will be much better afterwards if we actually are looking at somewhere around 4% growth for the remainder of the year, even after a 2.5% contraction in the first quarter. So if you go to the next slide. And so here, this is some data. So we partnered with Statistics Canada to create the Canadian survey on business conditions. And so we've been doing this throughout the pandemic. This is from the third wave. This is completely methodologically sound. We have around 13,000 responses from different businesses across the country. And so this data came from what was collected right at the beginning of the second wave, mid to late fall. And so we asked a number of businesses, what programs they had been able to access in Canada, including the CEBA programs for loans, the wage subsidy, or the temporary wage subsidy as well. The rental assistance and new program has been created for that now too, so that's not necessarily collected in the data. But what I really want you to look at is that graph on the right. When we ask businesses whether they feel financially prepared for a second wave, or whether they were able to take on more debt, most businesses said that they weren't, right? Most businesses are in the bottom left-hand quadrant there, and in particular, those hardest hit sectors that I mentioned. And so that's very concerning right now, considering that this was just at the beginning of the second wave. A number of different businesses said that they weren't able to take on more debt and that they weren't financially prepared for it. And so we have some projections coming out today from different business associations saying that there's around 200,000 businesses across the country that are at risk of being lost during this second wave, which is obviously astronomical. If you go to the next slide, please. Now, I mentioned the energy sector in Canada, and what we see taking place globally when it comes to commodity prices is very interesting. So we've actually seen a rebound in quite a few commodities, including base metals. And so in the metals, when it comes to a number of different countries or federal governments looking at green recovery plans or green economic recovery plans, that's created quite a bit more demand for metals because they play an integral role in that. Similarly, when it comes to agriculture and food products, demand has shot up, and that's one of the sectors where demand didn't take as big of a hit as many others. And same with forestry, but particularly when it comes to oil or crude oil in this graph in particular, we haven't seen the same rebound that we have seen in other natural resources, but the projections are that over the longer term, after this quarter, once we get to longer term economic recovery, that global demand for energy will once again go up, and that will obviously have an impact on the global economy, but Canada in particular. Secondly, when we're looking at the housing market, and this is obviously a very significant driver of growth in Canada, in particular markets as well. is that we've seen a bit of a shift taking place. And so the pandemic has created a shift in housing preferences towards more single family homes compared to apartments for obvious reasons that I'm sure a number of people would be able to surmise. But this is obviously having an impact on the housing market, both in terms of types of dwellings, but also in terms of locations too. And we've seen, a number of different Canadians leaving the larger urban housing markets for other markets as well. I believe that the hottest housing market right now is in Oshawa, outside of the GTA, and Kitchener-Waterloo, and a number of other regions around there too. And so one question is this a long-term or a short-term trend? I imagine that we'll probably be finding that out once we get to that economic recovery period. And if you go to the next slide. When it comes to unemployment, one of the concerns, obviously, there were an incredible amount of job losses in Canada, 3 million job losses right at the beginning of the pandemic. We've been able to claw a number of those back. We're still down something like around 600 or 700,000 jobs, but that's still a significant rebound that's taken place. One of the concerns, though, is the amount of Canadians leaving the labor force, which actually then that data isn't included in unemployment because unemployment numbers only include Canadians that are still looking for work. A number of Canadians, particularly women in the workforce, because of childcare needs, we see leaving, as well as a number of very young men too leaving the workforce and stopping looking for work. And so this is, in terms of a longer term economic recovery, being able to have as many Canadians or people as possible contributing to economic growth is going to be a very big challenge, being able to get Canadians back to work. So if you go to the next slide. And similarly, these patterns are uneven across sectors. So in those hardest hit sectors that I mentioned, accommodation, food service, information, culture, recreation, that they've seen the largest decline in employment, and they haven't been able to rebound at the same rate because a lot of those are those sectors that require physical presence and where restrictions have been put in place on their businesses in particular. And so within those sectors, there's also a higher concentration of lower wage employees as well. And so we see, different aspects taking place in the labor force too. And on that note, I'm sure many people in Canada on this call probably noticed that at the beginning of the pandemic, or even, in the middle of last year, in terms of ethnic groups, South Asians were the Canadians that actually had the largest unemployment rates in the country amongst any demographic group. What we've seen is that in the most recent labor force survey, their unemployment rate has actually declined. It's almost right about the average. I think at the height, it was something like 13.8% for South Asians were unemployed, their unemployment rate. Now it's around 8.7%, and the average for Canada is around 8.5. But one of the questions is, are those large amount of South Asians, is that decline because a large number of South Asians are leaving the labor market too, which might be why unemployment is declining, because it doesn't count Canadians that are no longer looking for work. And so if you go to the next slide. So just to conclude, I thought I would mention that the way that we're thinking about it at the Canadian Chamber of Commerce and working together with governments and businesses is in 3 phases. Right now, we're really in a, we need to be able to keep our heads above water phase. And that includes providing, supports for businesses that are at risk of going under, supports for individual Canadians that need that as well. And then the second phase is really that reopening phase. And, we've done this before and it didn't work perfectly when we reopened before. And so we really need to think about what are the data-driven decisions that we need to make reopening decisions. How do we implement testing and tracing nationally, even before it comes to a reopening period, so that the risk of us having to close again and put greater restrictions in place is less so. And so these are very important questions that we need to actually start planning now, even though we're not in that second phase yet. And then, of course, the third phase being longer term economic recovery. How do we produce economic growth and produce jobs to get out of this hole that we're currently in right now? According to projections, the Canadian economy is supposed to grow significantly this year. Our economy is not going to get back to the size it was pre-pandemic until at least kind of mid next year. Similarly, just to end, because I know we mentioned interest rates at the beginning, right now the signaling is that interest rates will probably remain more or less where they are until at least the end of 2022 as well. And so maybe I'll leave it at that, Vijay, and pass it over to Sandeep for the rest.
Thank you very much, Dr. Stratton. That was really a lot of information. I did glean a lot of new information there. Something that I think a lot of us have always thought about. Is it really true that some of the underdeveloped nations are actually doing better? But you've got statistics now to show us that that is true. So a lot of us have connections in India, and we look at India and say, you know what, why if or seemingly on the surface it doesn't seem like they're doing as much to stop the pandemic, but they're actually doing better. So we'll get into more detail about that, and I think that's a good segue for us to get to Mr. Sandeep Goyal. Sandeep is a great friend of the chamber, and I have great pleasure in getting Mr. Goyal on started. So over to you, Sandeep ji.
Thank you, Vijay, and thank you, Trevin. I think it was a good insight on the global economy and Canadian economy. So I'll just give you a brief on the bank in terms of what are our capabilities in India and why we are the spokesperson for the Indian economy across the world. So next slide. At a glance, if you look at ICCC Group presence in India, I think we are one of the most diversified financial institution brand in India in the private sector, and largest touch points. So I always say that we are present in India within 10 kilometers of any living soul in India. So we have good presence on rural side as well as on the urban side. And most innovative bank, we are most awarded bank, I would say, and most recognized financial brand on the Indo-Canada corridor. Moving forward, in terms of Canada, I think we were, next slide. In Canada, we were set up in 2003 as a 100% owned subsidiary, and we bring the full capability of the parent bank, given their large, I would say, largest treasury across currencies, and their view on the global economy and the kind of place they get within the advisory corridors of Indian economy, both at the Reserve Bank as well as in the Ministry of Finance. So we bring those capabilities into Canada. And anybody who is present in Canada looking at India, I think a lot of people are looking at India, both from an Indo-Canadian perspective as well as from a corporate, pension funds, investment perspective. So we bring in those capabilities to Canada of the parent bank. So I'll move you through to the next slide in terms of what we are seeing from Indian economic outlook. I think we have seen various data points coming out of India in terms of how we are faring on the pandemic front. One of the best recovery rates across the world, least fatality rates across the world. Probably, I think there is something to do with our genetic construction, that as Indians, I think we have fared quite well against the pandemic. And from an economic standpoint, India operates on that April to March financial year plan. So it is, all my numbers will be on the financial year basis. So when I talk of H1 FY21, it is the major impact period, which is from April to September of 21. It was the first technical recession where India went into recession. And there was a lot of recovery which happened purely based on the first phase of anticipation of the vaccine rollout. So I think we are the vaccine capital of the world in terms of manufacturing of vaccines. And India is actually doing drives within the country as well as outside in that South Asian zone, where we are donating a lot of vaccines to almost 6 countries which are in need of vaccines. So if vaccines get successfully rolled out, there are a lot of buoyancy factors which are there well built into the economy. So in the current financial year 21, we expect a 6% contraction, as I think Trevin also mentioned. Across the world, we have seen contraction in the GDP. But yes, there will be a bounce back, and it will be a sudden bounce back, almost 10% bounce back in the real GDP growth as expected in India. And this is again something which has been internally assessed. It could be a range of scenarios which will come out, because there is a lot of impact of global economic movement which will be there on India. But this bounce back will be supported through two broad factors, which will be on the supply side. I think India has implemented this profit-linked scheme in terms of getting the manufacturing growth back on track. And across sectors, there are very targeted kind of implementation which has been done. So it's basically a fiscal measure which the government has put in place, and they are quite hopeful that it will result in a big buoyancy on the supply side. So there will be a lot of supply which will come in. High contact services sector, which is like hotels, restaurants, airlines, which are currently have been majorly impacted, as Trevin also mentioned, will be something which will bounce back in a very, very dramatic way as I think the vaccine rollout happens. And government capex spending, I think they have put huge amount of money into the economy, as I think Western world has put. India has also directly put into the economy through infrastructure push. So this will definitely aid the revival. And on the demand side, high savings rate, I think money is going into bank savings. As a bank, I can tell you, I think highest savings rate in recent times we have seen across the world, which has been coming into the banks in terms of both current and savings accounts, and the lowest cost of borrowing which the world has ever seen. So that will basically has some kind of impact on the consumption demand, because you have more disposable income or liquidity in the market to basically fuel that asset demand. And financial conditions will continue to be easing. Biden administration has just come in announcing a $2 trillion infusion into the economy. That money is going to go somewhere. So it will go into emerging markets in a big way. And what China we have seen in terms of contraction of credibility, which I call, will actually move towards India. So there is a lot of money flow which is going to happen into India, which will push the demand side. And monetary policy has been very friendly. Interest rates, the way Bank of Canada is managed, similarly Reserve Bank also has not touched the policy repo rate at 4%. So monetary policy remains favorable for this kind of demand growth. Moving to next slide. In terms of inflation, it has been always of concern in India. The moment you have big demand side, supply side surpluses, inflation raises the ugly head. But it has been controlled. I think there has been the money supply which has been curtailed within the banks. I think there are a lot of requirements which the bank needs to maintain with the central bank. They have tried to control the money supply. Headline inflation expected to remain in average range of around 6.5%, which is not bad for a country which has 4% repo rate. So effectively 2.5% is the impact which is there. Inflation, there are certain headwinds, which I think I would say, because as Trevin mentioned, metal prices, commodity prices, they're all on the upswing. And they are something which India imports a lot in terms of oil as well as metals as a developing country. So those supply constraints as well as the pricing will always remain a challenge. It's an unknown factor for India. So that is something which we need to watch from the Indian side. Again, on the fiscal policy, as I mentioned, monetary policy has been friendly, and fiscal policy also remains very friendly in terms of both central government as well as the state governments putting money into infrastructure. So it will remain a friendly policy stance. In terms of external sector, I think balance of payments, as we have seen, weak imports and cheaper imports and robust services exports, will continue to, as a country, I think India will continue to have account surpluses and strong foreign flows in terms of both equity and debt markets, pension funds, foreign institution investors. There's a lot of liquidity there. People call it a wall of liquidity which is coming into India. So it will have a very, very benign impact on the stock markets and debt markets. In terms of rupee, I think we have all seen what kind of soothing impact Biden victory has done all over stock markets, debt markets, exchange rate markets, interest rate markets, everywhere. I think there has been a very soothing impact. Brexit and again vaccine dissemination will aid a emerging market rally. That is what our assessment is. And including the rupee probably might strengthen against all Western currency pairs. as I think liquidity hits the rupee markets. And RBI has always maintained a policy stance that USD INR will remain in that range of 70 to 75. So on the lower end, we are expecting as a bank, I think we're expecting it to be on the range bound, but on the lower end side. So that's the view as we go forward. Definitely a lot of uncertainties, but I think outlook is quite positive, and vaccines will determine in terms of what trajectory the Indian economy takes. So thanks. Over to you, Vijay.
Thank you, Sandeepji. I think that was a good discussion there, and I think now we'll take some questions. I have got some questions from the audience that have come in, from on Facebook, as well as we can take questions here. So if anybody has any questions, please do send it to us, and we will answer it. We will ask it to our audience, to our panel. So we have a couple of questions. We'll start with one. One is, this question is, what sectors will see the growth this year? Any expectations? So Trevin, do you want to take that? Like, what sectors? We do know, some are very obvious. Healthcare, PPE, all of that is pretty obvious. But besides that, as chief economist, what is the non-obvious sectors that you think, will grow?
Yeah, I think so. It's a very good question, and healthcare would have definitely been one of the ones that I was going to mention. So I think that there are two ways to look at this. One is, what are the sectors that haven't been as impacted and will continue to grow? And the other one is, what are the sectors that have been hit hard but that are going to see a significant rebound, so their growth rate is going to be very high too. And so in the first camp, I would in particularly look at information technology companies. Obviously, we've already seen what's going on in the stock market when it comes to those companies in Canada and in the United States. And so there are a lot of opportunities there. And, a question to keep in mind is, we're all, oftentimes we would have these meetings in person, or, a number of businesses have adapted to using e-commerce, or a lot of consumers have adapted to using e-commerce as well too. And so, if these are longer term trends, working from home, using e-commerce, things like telecommuting, things like this, then certainly, that's a pretty large scale shift taking place in the economy. Even within that sector, I would say that, look, when we're looking at Canada, but also when we're looking at a lot of advanced industrial economies, they are having some sort of green recovery plan, whether that will be spending on green infrastructure or other ways to address climate change, but also seeing economic opportunities in clean tech sectors as well. And to give you, an example, when we're looking at growth this year in Canada, the highest growth driver, there are different growth drivers, right? Business investment, exports, consumption. The biggest growth driver this year is going to be government spending in Canada, followed by consumer spending, followed by housing. And so a really big question, perhaps not since maybe 2008 or even well before that, has, looking at policy responses from governments be an indicator of, where the growth sectors might be, just because spending is going to be so high when it comes to economic recovery plans. And then secondly, on those sectors that might have taken a big hit and they haven't recovered yet or fully recovered yet, though they've started to, I would say, obviously minerals is very big, and that didn't even necessarily take that big of a hit, and that has to do with the green recovery. Over the longer term, I'm very bullish about, maybe not very bullish, but I think that energy prices are going to recover, that demand's going to go up when the global economy recovers, and that, that there is an opportunity there as well. And then as a whole, I think financial services will probably be doing relatively well as well.
Okay. So thank you very much, Trevin. And Sandeep, do you want to add anything there?
So, Vijay, I think I would say, as a general guidance, any sector which has been hit very badly during this COVID, you can look at a revival. See, world will come back to normal. It has to come back to normal. So I will say that the sectors which have been worst hit will be the first to rebound the most.
Excellent. So that is, I think what Trevin also mentioned. So if you got stock that's down 95%, and if you're saying it has to go up, it has to go up, it has to come back to the previous level. So And that's where you can make your most bang for your buck. So if it's at 5% of 100 and it's going to go back to 100, you're making 20x. So I think, so thank you very much, guys. If those of you are listening, that's some advice there. So don't, if something's beaten up and something that like airline stock or something in the hospitality business, people are going to travel, people are going to do that. And I was speaking to my wife and I was saying, will we travel less or will we travel more? I have a feeling I will travel more after this. So we might actually travel with a vengeance, because we were stuck up for so long. So maybe that's something that people should keep in mind. So we have a couple of other questions here. One question is to the Canadian economy, and Trevin, this is especially to you. Biden came in, we got maybe some bounce with Biden in there, but with Keystone down and specifically, more green energy with Canadian energy, what is the impact? Is it positive? Is it negative? What is your thoughts on that?
So I don't think we've seen yet, whether Canada will be able to figure out the Keystone situation. Obviously, there was an executive order signed yesterday, but we're certainly hoping that there's a possibility of getting that done, and that's because the United States is, as I mentioned, demand for energy is going to be going up, and even a green recovery is not going to be able to put in place immediately. And so if you're the United States, are you going to prefer to import oil from Venezuela or from Saudi Arabia or from Canada, who actually has more stringent environmental standards than those countries, if demand's going to be going up and you're going to need that energy anyway? And so I think in some ways we really need to get our messages out to the United States about what's going on in Canada, about the environmental standards in place here, about that that there's carbon pricing in place here, that a number of different energy companies have made very ambitious net zero targets too, and if we're able to get that out there, then I hope that pipeline and others are still going to be put in place. But if there is a huge risk, and it will be a big hit to the Canadian economy if we are unable to figure that out. So it's a concern.
Yeah. So what could Canada, as an economy, what could we do to offset any losses that come from oil? One is obviously find new markets for oil, which I think we're already looking for. But could it be another industry itself that could take up that spot? I mean, take that much of our GDP. So what are your thoughts?
Yeah, absolutely. And I mean, that would be, part of the idea of a green recovery plan is not to have one sector take over for it, but that the energy industry, which is so robust in Canada, having a transformation to have lower emissions. And so, that would be a big piece of it. And if we're able to be a world leader and a first mover in that, then it's probably a pretty large competitive advantage, considering that a number of different countries are going to be looking at moving in this direction.
So Sandeepji, we have a question for you. This question is on Facebook Live. And again, any of you watching on Facebook Live or on the Zoom webinar, please send in your questions. This question is, do you think there will be a reverse flight of capital from India once the vaccine is rolled across the world? So capital, could it fly out of India?
See, when I talk to lot of investors, pension funds in Canada, they're putting large amounts of money into long-term infrastructure. How will that flight of capital happen back? A long-term capital commitment into infrastructure space is something which is locked. See, from an equity standpoint, those times we have seen they have been volatile in terms of money going in, money coming out. But the kind of money which is going into India is more of a long-term commitment. I don't think so it will ever happen that money flies out of India, because these are into long-term projects which are fundamentally changing the shape of India.
Okay. No, excellent, Sandeepji. And I think we have one more question here. This is not one more. We have many questions. So we'll try to get as many of these as possible. So Trevin, the question is on the topic of immigration. And this is something that's very close to a lot of Indo-Canadians. A lot of us here are immigrants. And, will immigration be one of the levers that Canada can use to kind of, get the economy started again, to kind of, and it's one of the levers I think the Canada has played quite well, and still there is there is interest, there is demand for people to come to Canada. So is it how much do you think Canada should play and will play? So what are your thoughts on that?
Absolutely, and it's very complicated because there's so many moving parts. So first of all, I'll say that actually a lot of Canadian economic growth over the past few years before the pandemic was due to immigration, was due to expanding the size of our economic base with more people, not necessarily due to productivity gains because of investments in technologies and skills from businesses. And so that was actually one of the largest contributors to Canadian economic growth. And so obviously there has been, in terms of labor mobility globally and immigration, there has been a big hit during the pandemic, but eventually it will, a number of people will be immigrating and will be traveling once again. And so, yes, I mean, that absolutely, we need to get back that to be a driver of growth. But the one wild card is that Canada also benefited quite a bit from the immigration policies in the United States over the last 4 years. And in terms of being able to attract talent that might have gone to the United States instead. And so assuming that some of those immigration policies in the United States now might be changing with the new administration, Canada, needs to make sure that it's not necessarily on the back foot when it comes to being able to attract skills and immigrants going forward, and that it maintains a competitive immigration environment.
Yes, Trevin, I was joking with somebody and said, what was the sure shot, if a way for Toronto real estate prices to still stay on top was if there was a Trump presidency. If there was a Trump presidency, and I'm only joking here, there would have been so much more immigration from the US into Canada that it would have held, Canadian real estate prices up. So that's not going to happen. So as you rightly said, there is a risk. Some of those things, people that do came in, if they're transient in their outlook of Canada, then we might actually lose them. We could lose Canadians that are also in Canada that are now probably looking at the US as well. So there is things that can flow. As I said, people are fungible, they could possibly move borders, and that's something that I think we should all be open to and work towards seeing how we can work with that. We have a couple more questions. One was about, you mentioned South Asians, unemployment numbers down. Could it be because a lot of them are starting up businesses, going self-employed? Could that be a case, Trevin or Sandeep?
I mean, there are a few different factors there. So I think a lot more South Asians tended to work in and also tended to own businesses that were in those hardest hit sectors. When it comes to accommodation, when it comes to food services, a number of those businesses, there were a lot more South Asians working in them or owning them than previously. So I mentioned the labor numbers and in the South Asian labor force. We also have numbers on South Asian business owners in our Canadian survey on business conditions, and they were also one of the hardest hit demographic groups in terms of loss of business or deciding to close their businesses as well. And so, I mean, so for now, I'm not sure that's the case, but there is going to need to be significant business creation or reopening, once we get out of this period too. And so there probably are, a lot of opportunities for South Asians to use their entrepreneurialism to help drive that recovery going forward.
Fantastic, thank you. And I think we have a couple of questions related to India. So these are something, Sandeepji will send it your way. One was, and this is something that I myself have been, I got the answers, but I have not really done it as yet, is can Canadian citizens, invest in the Indian stock market? And I know the answer is yes, because I've spoken to you about this, but can you let the people know, because they are as eager as I, and I will definitely come back to you and get my account set up. But everybody here, there are a few people here who want to know how that can be done. So, if you want to just give us a few.
So Vijay, we have one of the most successful and technology-friendly platforms by the name ICCC Direct.com, and it is a full online brokerage, which is the signature platform of ICCC Group. So definitely, as a Canadian citizen, you can open a bank account and a share trading account in India. There are certain documentary requirements which I think can be fulfilled locally sitting in Canada. so we can handhold you. So please reach out to me, or you can reach out to Vijay, which can be forwarded to me. That's fine. And it's a good product. I think you should experience it. And people have told me good things about that platform. I am myself a user of that for the last 15-20 years now, and it was quite seamless when I migrated to Canada. So I have been using that platform for the last 15 years now.
Thank you, Sandeepji. And then maybe you're also giving out mortgages. So there are people who are still looking at. There's a lot of people that invested. We had another session towards the end of last year, or actually it was early this year, where we were trying to get people in the Indo-Canadian community to look at angel investing, because my hypothesis was Indo-Canadians only look at some asset classes, and one of the most major asset classes they look at is property. Now, since they only look at property, and within property there's condos and houses, so is that still, based on everything that we talked about? I think we've got a few questions here. Do we still look at condos? Do we look at houses, or do we not look at property anymore? What are your thoughts? And we'll go to both. We'll start with you, Sandeepji.
So 100% real estate is something which will you have to be a Varun Buffet in terms of looking at long-term investments. So real estate is a long-term friend and a short-term enemy, I would say. So you should always look at long-term benefits of real estate. So real estate will continue. People will need houses to stay, and I think immigration as a tool which Canadian government is using, you will need more and more houses. See, almost 400,000 people's applications are pending in Canadian embassies across the world. So these people have to come in and they have to stay. They have to find a place. So real estate is a very good investment. Continue to be invested. There could be short-term ups and downs, but I think long-term benefit will be there. And if in case Indo-Canadians, I think we all are in love with our home country. So any requirement in India also you have, we provide home loan assistance for your India requirements also in Canada.
So in India, I think that the pricing is a little good. It's a good time to invest in India, I think. So the prices are kind of down right now.
Yeah, absolutely. Yes.
Okay. Thanks, Sandeepji. Trevin, your thoughts on investment, real estate investment, and the subclass of condos versus homes.
So I think, it's a very important question, because there is some talk or concern about whether the Canadian housing market is at risk of overheating, considering what's gone on in the housing market. I'm in the camp that it's not, and I the government of the Bank of Canada is also in this camp, as he stated earlier this week too, and it's because the housing market isn't going up because of speculation. The housing market is going up because of increased demand and low interest rates. And so to me, that is not, that's not an overheating market to me. And so it seems like a wise investment, definitely over the long term right now too. To your previous question about, VC investment and angel investment, I think that would be an incredible thing to be able to create in the Indo-Canadian community here in Canada. My wife is Indian American, and she's from San Francisco, the Bay Area. Just the ecosystem they have there for angel investment and venture capital and the Indus entrepreneurs is amazing and is incredible for economic growth of the entire region and the community too. And so if there are opportunities to be able to create something similar here in Canada, in the GTA or elsewhere, I think that's a great idea.
Absolutely. That's something that's on our list of things to do. We've already had one webinar around it. We're building a little bit of understanding. It's new. It's not something that people have done in the past. So we'll need to educate people on it. But, in terms of investing in really productive assets that can not just give you, I'm going to go into a little Hindi slang here, but 5 taka, 10 taka, but you're going to do like a 5x, 10x, right? So it is a wholly different ball game, but obviously there are risks involved as well. But I think that's something that I think we're definitely trying to bring the awareness of those asset classes as well. So one other thing that I want to ask, and these are some questions that we have here as well, is I think one is this is a question that is very, very recent. The impact of the Serum Institute fire on vaccine supply within India. I don't know if that's something you guys have anything. Is that Sandeepji, you want to hazard a guess?
Very difficult to assess as of now. I won't say that I know the impact, but given the kind of width of production facilities which Serum Institute has, there could be some impact, but might be in the short term.
Yeah, and just because I've been reading up as well, so Serum Institute is one of the two manufacturers. So there's another manufacturer as well. So I think in that sense, it is there. So now I have another question here for both of you. So this is like $1 million, question. When will the economy open again? When do we think? What is the metric? Are we waiting for 70% vaccination? When do we go? When do we say we are back to normal? When will that happen? Trevin, you want to go first?
Sure. So I think in Canada it'll depend on the province or territory. Some are doing much better than others when it comes to case numbers. When it comes to the largest provinces, Ontario and Quebec, we're looking at kind of into March as potentially being the time the economy can reopen, not necessarily when we get
March
to herd immunity.
2022 or 2021?
March 2021, when the provincial economies will hopefully be able to reopen if we do things correctly. And in terms of herd immunity, I mean, right now the projections are reaching that 70% number around September. I think that the business community, we, at Chambers of Commerce, also have a role to play. If there's anything we can do as businesses to help facilitate the vaccine rollout as employers for employees, or for testing with employees, or for just getting messages out, to accelerate it, I think it's very important for businesses and governments to work together, and hopefully it can be before September then.
Okay, thank you, Kevin. Sandeepji, your thoughts?
Yeah, Vijay, so what I feel, see, these vaccines, there is always the uncertainty in terms of how it will get rolled out. But if it is successful, I am 100% with Trevin, then it will get accelerated across provinces. People will put money and effort into it, because today I think that effort is not being put because people don't know whether it will be successful. So once you have success, you have immunity, I think the virus cycle will break, and then it will get accelerated across provinces. And 100% by March, April, I think if vaccines are successful, you will have a full recovery across provinces. That's our estimate.
Thank you, Sandeepji. So, Trevin, one question to you. March 2021, we will get to, you said, opening up of the economy, but we will only hit herd mentality sometime in September, right? So, which means between March and September, in your view, this is like a period of gray. So, what happens then? Because why are you so confident that if you open up, it will stay open till September?
And that's why we have to do everything right. And that's what I was talking about with those.
Yes.
So now till March is that first phase. And September is ideally when that, is according to current projections, when that third phase can start. That second phase is going to be crucial because we didn't do it perfectly last time. And that contributed to ending up in this situation again. And that's why we really need to have, clear, consistent communications amongst all levels of government on what the restrictions are and what behavior needs to be. We need to be able to accelerate the vaccine rollout during this second phase incredibly. This is going to be a huge undertaking that countries have never really done before. And then, thirdly, we also need to be putting in place that testing and tracing, and a number of other countries have done much better when it comes to testing and tracing numbers than Canada. And we need to start planning that now so that when our economy starts opening up, whether it's in March or otherwise, that the pieces are in place for that second phase so that we never have to go back into this situation before herd immunity comes into place.
Excellent. So we have a very specific question about Ontario. I've heard, our lockdown is going to be extended. I think it's already announced to be extended. Anything specifically to Ontario, because a lot of our viewers are from Ontario. Trevin, you want to take that?
No, I would just echo what I just mentioned, which is that it's about getting it right, and it's about making data-driven policymaking decisions, where transmission takes place, when it takes place, so that when we're opening up, there's clear and consistent rules in Ontario and elsewhere across the country, and that we have the planning in place to be prepared for reopening as well, whenever it's safe to do so.
Okay, that I think brings us to close to the end of this session. I'd like to ask our panelists here. I think let me see if we've got any more questions. I don't see much more questions there. Anybody in the audience? Anybody wants a last question? I have one thing which says, travel sector, hotels and travel sector. I think we talked about it, but a lot of Indo-Canadians with investments in hotels. So Sandeep ji, what would you say?
I will always say stay put. See, if you have the ability and liquidity to survive this issue, say for another 3, 4, 6 months, I think, travel sector will rebound in a big way. See, I don't know if you are aware, if you just type what happened when Disney opened up their cruises.
Mm-hmm.
So there is a lot of latent demand for travel. And I think, as Vijay also mentioned, that you will travel more. Because you know that what happens if you are not allowed to travel. So there is a latent demand in your head and in your psyche. So it'll happen more. And I was actually talking to some of my friends, and many of these hotels in the north, Muskoka and all, they are totally booked before Christmas.
Mm-hmm.
So it was almost $450 a night. So hotels, I think, is a sector which I think has been the worst hit. Airlines and hotels, and I think they will be the best to rebound. But I think, again, it is dependent on vaccine, which hopefully I think we'll be seeing the success.
Thank you, Sandeep ji. Trevin, are you same thoughts? Anything different?
Same thoughts. I agree too, but I do think that there will be a rebound. And, I'm not sure about pent-up demand in some sectors. Like the goods sector hasn't necessarily gone down that much in Canada, at least, but there is pent-up demand in travel. That's for sure. And so I definitely see that rebound happening at some point.
Okay. On that note, I'd like to thank our panelists, Dr. Trevin Stratton. Thank you very much for your time. Thanks for coming in. And we think, you've got some interesting thoughts on some of the things that we want to do, like the angel investment. We will try to bring you back in during the course of this year, and hopefully we can have you back in. And Sandeep ji, thank you very much for your time. And as always, we will, look to you for guidance, and we're going to have many more of these sessions. So, you can rest assured we will have you back here again as well. And as we go, I'd like to thank our sponsors, gold sponsors, Turkish Airlines, media partners, Weekly Voice, Punjabi, PTC Punjabi, and also sector sponsors, which includes ICICI Bank, SBI, Canada Bank, Seneca College, GT20, Raymond James, and TELUS Business. So thank you very much. Those of you who attended today's webinar, we will have many more of this every Thursday talks. Just tune in. It's on Zoom as well as on we'll also have it on LinkedIn Live, Facebook Live. Today we started a little late on LinkedIn and Facebook, but we'll have it better next time. So thank you very much again, and have a nice one, everybody. Bye now.
Thank you.
Thank you.